Hello and welcome to this week's episode of the Fit Finance Sessions with me, Henry, Tim and Tom as well. Thanks and welcome along. What an exciting week it's been. We've had a president elected, another president saying he's not going anywhere, and then a vaccine. And then actually today, some of the Tory party deciding to leave the Tory party. It's all been very exciting. And the markets have gone up dramatically. What are your thoughts, guys?
Well, it's good, isn't it?
Yeah.
I think, I think positive news from the vaccine. I don't think we're out the woods yet. There will be still economic damage, but I think that's the news that has been kind of needed to move from where we were before valuation-wise. And I think UK equities have been more industrial, financial, sort of value orientated, which we've probably touched on a bit in these podcasts before, tend to have done better on the back of those news. And actually you've seen some of the tech stocks in the US not sell off completely, but retreat slightly. So if you're looking at tech in the US, a little bit down in some firms, and whereas actually the main market, a lot of the other bits have been rising more significantly. And I think it's also been a bit of a win for sort of clean energy and things like that with the Biden presidency.
I mean, I think what amazed me most, though, was the way International Airline Group, AIG, which is British Airways, that went up 40% at one point, which, I mean, it's almost like some investors never thought there was going to be a vaccine and BA would never fly again. I mean, it's an extraordinary rise in one day. I think it closed up about 25% on the day in the end. I was amazed by it, because I still don't think that, as you say, I don't think we're out of the woods yet. I think it'll take a while for this to for the economy, for our economy, for the global economy to actually recover. And even if we all get fed a vaccine, or however the vaccine's delivered, probably not fed, but a vaccine in the next 6 months, I don't think it's likely to be any sooner than that. Certainly for some sections of society, we sooner. You know, whether or not that means we're all going to jump on an aeroplane in the summer, I personally don't have much of a problem about it. I'd have jumped on an aeroplane right now, but I know some people are far more nervous about this than I am, and I don't think they'll be hurrying away. And actually, of course, some people have gone, do you know what? You know that holiday we went on in Cornwall this year? God, it was nice, wasn't it? We didn't have to get on an aeroplane. We just got in the car, no faffing around in an airport and all that sort of rubbish. They all spoke our language, and you got a great bacon sandwich in the morning. It's a perfect summer holiday.
Yeah, I think you're right. I think any potential next downturn is at least postponed until, well, at least until the end of the furlough period. Of course, Rishi's been dishing out some more Rishi, isn't it, until the end of March. Yeah, that's just a long thing, isn't it? But I don't know if I saw this morning, Bill Ackman, who runs Pershing Capital, one of the largest hedge funds out there. He's just bought $6 million worth of insurance, betting on another downturn, basically. And he made 2.6 billion this year after the first massive sell-off as businesses were collapsing. So maybe just to err on the side of caution, there is a flip side to the coin, and if Bill's doing that, then arguably, there is some likelihood out there for another issue.
What's his argument for the downturn? Just that economists don't recover as quickly as we're hoping?
So as much as I can gather, it's an insurance policy that pays out on it's credit default swaps. So it's paying out on businesses going down, essentially. So yeah, I don't know how much he bought the first time round. Whether or not he bought the same amount. So egging on the same sort of level of downturn as before, but nonetheless, I thought it was worthy of mention the fact that he's just bought that yesterday, I believe it was.
It's a smaller trade than last time. It's not quite as big as before, but I think the premise is that he feels the corporate bond market is, the rates they're paying are too low. and that they're not factoring in the risk, like Tim was saying. But yeah, it's the same move, but it's not to the. I don't think he's taking the same extreme positions he did earlier on. But I think that probably gives you a good barometer of where we are. There are still companies out there that are going to struggle because of the economic downturn. And I think a lot of these big rises in share price values like IAG, Rolls-Royce, Cineworld, that they're also, it's much easier to rise significantly when you've fallen a lot in the first place, particularly on percentage terms. So yeah, I equally agree with Henry's point of these businesses will still continue. Some might fail, but it's not like planes will disappear altogether. I might get quoted on that in 2 years' time. We never know. But I think, yeah, there's a sign of a rally, and hopefully that continues. I think into spring next year. I think if there is a vaccine, there's a bit of a cull of weak performing businesses, and I think a lot are actually becoming more efficient. You cut a lot of costs and figure out what's necessary. Actually, I think you'll see some businesses come out of this a lot stronger and a lot better placed, and hopefully that goes into investor returns.
I think that's right, and you see it. I mean, we're essentially just going through a recession, right? And recessions happen all the time. I mean, not all the time, literally, but I think on average every 8 or 9 years. And so we were due one. And of course, when we go through a recession, it cuts out, some of the smaller companies, the companies that aren't well managed, do fail. And of course, that cuts out some of the competition for those that are being run well. And so they succeed nicely off the back of it. And I think, as we said in the past, there's so much more money. I think QE was bumped up by another 150 million last week as well. So that'll drive the stock market forward, just as we saw sort of post 2008. And so whilst we're not going to see an immediate fillip in the markets, I suspect over the course of the next 3, 4, 5 years, the stock market will be a great place to be because we will see some cracking returns. But
it's definitely a lot better than sitting in cash, and that's always the end of the day. If you sit there and do nothing, it's going to hurt you. If you get involved, then you've got the opportunities to make a difference and stay relevant.
Yeah, quite. So the news next week, I think, is that Brexit's all going to be agreed. So should we leave that hanging until next week, and we can discuss the fisheries decision that's been made, the agreement that's come to fisheries. How much cod can I take from the English Channel next year?
I think that's a good place to leave it on, but equally, I think we could have made that statement every week for the last 3 years.
3 years, yeah.
No. I saw in the newspaper that next week it is absolutely the deadline. It's the hard deadline until the next deadline comes. But cool. Well, until then, thanks very much for joining us, and look forward to more of our musings on the economy and all things financial planning. But until then, goodbye.